Live. This is the market update. First, Korea goes, then chips go, then Nasdaq goes. What is the truth? Nasdaq is currently bouncing. Is it over? We will address all of these things, including 10 companies who could be next if this gets out of control. The first thing I'm going to tell you is that these type of things don't end in one day. Nasdaq and the market wants you to think that. I would think again. And of course, there's Bitcoin's role in all this. And we will naturally talk about that. And frankly, I've got a hot take on this Fed thing. What's all over Twitter is flat out wrong. Stay tuned for the details. This is the market update. I am your host, Bill Noble. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live and if the content works for you. Don't forget to hit the like button on YouTube and TikTok. Now, ladies and gentlemen, let's welcome who's here. We have Felix, the Fuzz Crypto, Loco, a member, Yav, Pat, Thomas Chai, Zepeda's a loyal member. Welcome to the show. Now, the Fed. Here's what's all over Twitter. So Warsh didn't say anything, but was hawkish. The Federal Open Market Committee, I'm thinking, voted 9 votes to not do anything and 3 votes to hike rates. And now the new bond market minutia goes like this. The more guys that vote to hike rates, that's now forward guidance, meaning the more guys that vote to hike rates, the more hawkish the Fed will be in the future. Now, the next old school notion is the Fed should hike rates to make the bond market happy. In other words, if the Fed hikes rates, the bond market can be less hysterical about inflation. When inflation is being caused by hyperscaler build out and conflict, war is inherently inflationary. All war. So I don't know what the Fed is going to do about that. And this idea of hiking rates just to make the bond market happy starts a chain reaction. So the Fed does one hike. Okay, the bond market's happy this week. Then what's the bond market going to want? Another hike and another hike and another hike. Now, not only, well, let's put it this way. Even if that's not true, even if the bond market would be happy by one hike and a big speech from Warsh and how he's on top of this inflation thing and he'll do what's necessary, there is a reason why the U.S. 30-year bond, the interest rate attached to that bond, that determines your mortgage rate and possibly your car loans too. Why is that interest rate blowing through its 2007 high and is now at 5.2%? Now, traditionally, and I've said this, that nothing survives an increase in long-term rates. This could be Bitcoin. This could be altcoins. This could be all this hyperscaler sludge, the people who financed it, some of which we'll go into and look at the charts. So if you want to know who's next, don't go anywhere. But back to this thing about the Fed and interest rates. So here's the hot take. Why is the U.S. long bond, U.S. long-term rates rising? Well, let's go over the math on borrowing. Uncle Sugar needs $2 trillion in new debt per year. So they have to go to the bond market and say, hey, guys, what's up? Can you lend us another $2 trillion and can we give you $2 trillion more in debt? Because, you know, they're prosecuting this conflict overseas. They're doing it without congressional authorization, and it doesn't matter whether they do or don't. The defense build out that occurs before, during, and after is 2T a year. A year. Meanwhile, back at the Hyperscaler ranch, these characters are going to go from 200 billion to 1T next year. They're going to try to push 1T in debt into the market. So it's like The government goes to the bond market holistically and goes, hey guys, I need 2T. Now Uncle Sugar has competition for the money. The hyperscalers are coming in and goes, hey guys, we need 1T. Now, is it any wonder that, especially with rising oil, that bond markets, the entire bond market just goes, you know what, boys, blank you. We're not taking all this sludge from you. And if we have to take this sludge from you, it's going to be at a much higher interest rate because Uncle Sugar is out of control. And so are these hyperscalers. Yes, there's inflation. But what is Warsh supposed to do about like $3 trillion in sugar hounds coming into the bond market? Okay, I'm going to raise rates. Okay, the bond market might be happy for a day. The $3 trillion tidal wave is still coming. And why does the bond market have to take all this paper? The bond market doesn't have to take anybody's paper. The bond market sets the price. Now, let's put it this way. If I'm right, Bitcoin will hold up. Notice that this was really about an interest rate train wreck that destroys everything and everybody. Bitcoin will get smoked, right? Everything will get smoked. You'll have 25% down in Nasdaq. You'll have a blowout in KOSPI. All things are possible. But I think everybody is just flat out wrong about the Fed, that everybody has to relearn the Fed, and everybody has to just think in a common sense way about interest rates, about the fact that, you know, Uncle Sugar's trying to crowd out the private sector, and the private sector is trying to crowd out Uncle Sugar. No one's ever seen that before. So we're using old math in a new world, which is why Bitcoin is holding up. Because you're probably wondering why I went through that whole Fed rant. The reason Bitcoin is not falling apart is because what's going on in the bond market may have less to do with interest rates, may have less to do with inflation, which of course is a new problem, right? Whatever, right? It's not a new problem. It isn't. And if anything, oil is going to blunt demand if it ever gets out of control. Warsh does not want to hike rates because AI will improve productivity. The focus is always on the hardware, not on the software. Is the productivity here yet? No. But the price of money has to do with the fact that everyone needs it. Now, a side note for Bitcoin. How is all this debt going to get issued? Who's going to take all this debt down? Well, there's only one answer. There's only one answer, and that's printing or an expansion of liquidity by whatever stealth mechanisms they have. Are they really going to let private credit blow up? You know, 3 big banks, and I'll show you the charts, so don't go anywhere. Morgan Stanley, Goldman, and JPMorgan. There's a reason why they're asking for the Clarity Act. They need to tokenize assets so they can dump it on your head. They also need a distraction if they have hyperscaler risk, because all it takes is one big hyperscaler debt deal to fail before everyone starts taking it out on their stocks. Now you're saying, again, Bill, what does this have to do with crypto? Well, let me just tell you. Ever hear of long Bitcoin, short the banks? How about long Bitcoin, short the banks and private credit? You want to know how these companies, how these hyperscalers are doing all this debt? I'm going to explain how they do it off their balance sheet. So everybody's like, oh, my earnings and oh, my this and oh, my that. Listen, these numbers for earnings, frankly, when you consider what's called an SPV, a special purpose vehicle, which is how the hyperscalers keep the sludge debt off their company's balance sheet. When you look at this, it does smell like Michael Burry 2008. It does, because it's just simply and plainly fake. And you know what? They're not going to stop. They're not going to stop. And again, what does this lead to? An impact on the currency and the system. Okay, so we're having a $3 trillion party. We're not telling the truth of how it works. And to get to peak stupidity, peak unbelievability, it's almost like the lizards wanted to blow up, because I can't believe this. Zuckerberg, aka Chief Lizard, gets on the tape after the earnings of Meta, which, I don't know, the market went down, whatever, and says, you know what? We really don't know what to do. We have all this excess computing power. We're thinking about building more, and we don't know what to do. Now, let me tell you something. What the market never wants to hear. The market wants to hear we're bullish, we're bearish, we're expanding, we're contracting. Just tell us you're doing something. One of the reasons why I don't think this is over in a day, and I think, Bitcoin's probably going to hold just fine, is that one statement. So if you didn't understand about the Fed, meaning, what the Fed does has nothing to do with what's going on with interest rates, or you didn't understand, why these hyperscalers are borrowing all this money and what the problem is, all you have to do is look at what the head lizard said. And he just said, we don't know what we're doing. So we're borrowing gazillions of dollars. We have funny money accounting, and we don't know what we're doing. I was like, I don't know. I feels like Bitcoin should go to 70 on that statement alone. And if our lizards don't know what they're doing, what in God's name is going to happen in Korea, where it feels like the GDP of an entire country hinges on the value of two stocks? Because undoubtedly by now, you've heard all about the massive leverage in the Korean stock index. It's massively over discussed, but the chart of KOSPI is under discussed. We'll talk about it. So if the consumers of the chips don't know what they're doing, what happens to the chip stocks? And is that over in a day when the head lizard goes, we don't know what we're doing? Everybody was focused on what Warsh said. They weren't focusing on what the lizard said, which is, we don't know what we're doing. So if you don't know what you're doing, what about the value of these chip stocks that are priced for these guys to know exactly what they're doing, to buy everything forever? And I'm like, I think we need to come up with some names where this would like ripple through. It already has. A lot of this stuff is already down. It's not like a hot take that there's a problem with, say, CoreWeave. Okay, but you do have to start looking at, okay, there's a problem with KOSPI, and the government's meeting, and the Bank of England is also involved. Speaking of KOSPI, because I saw this real quick, and Eagle King is not here, so I don't have the actual tweet. But I saw that the Bank of England made a statement that, yeah, we're looking at Korean equities. Now, let me just ask a quick question and then tie it to Bitcoin. Why is the Bank of England looking at Korean equities? Like, what's the problem? Okay, I'll tell you what the problem is. Because who is lending money to Korean banks and brokerages? Who is owning the hyperscaler debt? We'll talk about that. Who owns that debt? And are they on the phone with central banks going, if this blows up, we're going to need a bailout? Keeping in mind that, London is essentially the financial and banking epicenter of the entire world. So if the Bank of England cares about it and the Fed did not hike rates, are we reading between the lines about like what's going on in Korea, one, and two, what happens if that spreads? Like central banks are like, oh my, everyone's like, oh my God, inflation. Oh my God, the long bond. It's all over Twitter. I just had to put my phone down. I'm like, wow. Take whatever's on Twitter and do the opposite. The Bank of England cares about what's going on in the Korean stock market. You know what? If that's true, there's more to this than just two chip stocks and retail getting massively liquidated to the point where that actually is starting to look like 87, where you just liquidate absolutely everybody and everyone is forced to sell. My father's story about 87 was you did not have electronic order flow back then. You had to actually write a ticket for your customer to sell and then take it to a wire room where they wired the order to the exchange floor. And my father was describing every broker in the office standing in a line with a stack of tickets to have all of their customers puke out their positions. But they couldn't puke it out until the orders got to the wire room. So everyone is standing in line to sell. And that feels like what's going on in Korea. Obviously not the same thing, but there's a liquidation line. And when is that over? I don't know. They haven't even taken out the 5 wave. So let's just start with this chart so we can put the whole stream kind of in its context. We'll try to make sure TikTok gets it too. Okay. So, all right, here's KOSPI. Everyone's bearish. Everyone knows about it, mostly, right? Everyone knows that this is a disaster, and the disaster corn on the cob is all over Twitter, right? You know, hotlines for people experiencing emotional despair, blah, 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 blah. What isn't being discussed is how this triggers something bigger that lasts more than one day, all right? Now, in KOSPI, here is the 5 wave up. What's a 5 wave? Well, a massive emotional wave of buying. Let's just keep it simple. Now, if you have an uptrend, and even if it corrects, the bottom of the 4 wave, which is where the big emotional rally started from, will hold. So in KOSPI, you'll notice that it hasn't even gotten to the bottom of the 4 wave. It's underneath the 5,000 level. And in order for KOSPI to attack that point, which by the way is very logical, you just attack the bottom of the 4 wave. That's 13% lower. So if you're following me, the uptrend in KOSPI is theoretically still intact. The pivot points, they keep knifing through it. They haven't tested the real level yet. I mean, you don't know if the uptrend in KOSPI is over until it takes out the bottom of the 4 wave. Now, if that happens, if they do take it out, Katie bar the door. But there's probably another 13% to go. Even if you have a pump on a hyperscaler earnings that's good, you haven't tested the real level yet. And they're going to tell you it's over today because Microsoft's earnings were good. Okay. Okay, bro. Great. Now, if KOSPI goes down 10%, will that spill over into Bitcoin? Will that spill over into Nasdaq? I don't know. You can't sit here and say it's not, but there's so much baloney going on here. And there's so much risk to banks and the system triggered by this thing with Korea. Keeping in mind, stuff like 2008 all started with smaller entities having a problem before it reached bigger entities. In other words, it started with a small investment bank like Bear Stearns and wound up impacting a giant insurance company like AIG. That's when it all got serious. And of course, there actually is an insurance company angle with this, because you have to start asking yourself, all the Bitcoiners out there, where exactly is all this hyperscaler debt going? Like, who owns it? Now, this is the story of why the Bank of England cares. And this is also the story about why the Fed is not hiking rates. I mean, if you hike rates in an environment where people have just absorbed sludge into, your 401k. Your 401k. You're like, I didn't press a button to buy hyperscaler debt in my 401k. Well, guess what, bro? They did it on your behalf. So you want to talk about long Bitcoin, short the banks? You know what? When it comes to Bitcoin, let me say this before I go into this particular slide. When it comes to being positive crypto, when it comes to being positive decentralized AI, when it comes to anything that could come out of the Clarity Act, good luck with sell the fact after the Clarity Act because it's going to get passed. And good luck with selling crypto with the type of nonsense that's going on here. Now that I at least have an understanding and can explain it. I think 2008 was so hard for people that they couldn't get their head around the fact that bad loans were packaged into large groups of bad loans and then sold as securities. And then everybody owned the securities. And when the little loans started to blow up, it was a chain reaction. This isn't that different. It isn't. It has an 87 flavor. You have, problems in Japan, a hawkish perception from the Fed, and a frothy stock market. And it could also be like 2001, not 2000, 2001, where you had accounting funny business from Enron and WorldCom, plus a geopolitical event. So again, they got themselves a little bit of problem going on in TradFi, and I have no idea what that has to do with crypto unless you have a huge crash where it's sell everything. And even if they do, Bitcoin's the first thing coming back. Because when you see this, you're going to be like, wow, Bill, it's really not that big of a problem. It's over today because of Microsoft. Okay, let's talk about this. This is where everyone's going to click off when we get to PowerPoint, and this is where you shouldn't click off. So why one trade, 5 altitudes, the same wiring end to end. So here are the cast of characters, right? Can't see it on TikTok, but there's Nvidia, neoclouds, private credit, index funds, and your 401k. Okay. So since they can't see it on TikTok, I'll read it to you. So Nvidia sells chips, invests in the buyers of chips, and backstocks their own sold capacity. Meaning, Nvidia may have a giant warehouse of chips that are being leased, rented. People might be borrowing the chips. People might be speculating in the chips and lending money out against it, called, lending against compute. So I have Nvidia chips, and then I'm going to go out and borrow money with the chips as collateral, except the chips are obsolete in 4 to 5 years, and the debt lasts, 5 to 15 years. Be kind of funny what happens if the value of the collateral suddenly falls out of bed just because they reprice it. Don't have to be the end of the world. It's like houses. Oh, the collateral isn't worth what it was. Oh, okay. Boom. So the neoclouds, that's what they're called. They're borrowing billions against these chips, collateral that loses half its value in 3 years. So we're speculating with Nvidia chips. Everybody is speculating. And everybody assumes infinite demand for Nvidia chips. That's probably right. But what are they doing with the chips? Just like what were they doing with the houses in 2008? A house lasts 50 years. Chips are only good for 4 to 6. So all this debt, who's buying the debt? Well, the private credit firms. They're giving $200 billion in AI loans, and they're expected to do another $800 billion. One has to wonder what happens to this whole trade if Wall Street walks away. Remember, we talked about interest rates, bond market going, yeah, okay, guys, we'll take all this paper for you at a much higher interest rate. So it's about supply and demand for money. Now, when they issue the bonds, when the bonds are issued, when the sludge is actually out there, who owns the sludge? Like, who owns these $200 billion in security? Like, maybe they're inside the private credit firms, but what do the private credit firms do with the sludge? Oh, well, they sell them to bond index funds. So everybody goes, oh, look, it's hyperscaler. It's AI debt. Oh, isn't this debt great? Yeah, this debt's great. You know what? It's so great. It's got to be in a index bond fund, a bond index fund where the bond market goes, okay, this is the list of all the good investment grade bonds. These are the biggest ones. They automatically go in the index funds. And where are these index funds, by the way? Yeah, they're in your 401k. Now, if you want a little disaster corn on the cob, you would ask yourself, what happens if this debt goes from, investment grade, good quality, so it can be automatically in these funds? What happens if it falls or gets downgraded to junk bond status? Well, all the bond index funds have to sell the hyperscaler debt at the market. They're automatically in, and then they could be automatically out. So, bro, I got news for you. This is in your 401k. And this is why somebody's on the phone with the Bank of England or whoever. Or this is why the Fed is not doing anything about this. The Fed's trying to put on a show. Yeah, we're focused on inflation. No, bro, you're focused on this thing coming unglued. Now, is it going to blow up the whole system like 2008? Probably not. Probably not. But that doesn't mean you can't have like extreme volatility. If you have bad AI debt in people's 401ks, that's a serious problem. And I don't think that's over in one day, because this whole trade, they need 800 billion more. In other words, this huge build out is not over, and it's not going to stop. They're just going to keep borrowing and borrowing and borrowing. And again, going back to what I was saying about Bitcoin, is they're going to borrow or try to borrow $800 billion. And the head lizard said, we don't know what to do with it. So the bond market is stressed. They're printing the currency to hold all this up. And everyone is long technology stocks when the only technology stocks that doesn't have phony baloney accounting is Bitcoin. I mean, it doesn't matter whether you're bullish or bearish or whether you think it's going to 40K or 30K. Bitcoin does not have the same problem that these hyperscalers do. They don't. It doesn't. Right? And the joke that, if Nvidia's warehouse, this is from Raiders of the Lost Ark. Okay. If Nvidia's warehouse, where they supposedly have infinite demand for all these chips, if Nvidia's got a warehouse full of chips that are either leveraged somehow for loans or that people haven't bought yet, if that's Nvidia's warehouse, yeah, that could be a problem. That could be a problem. And you know what? You know what's really funny is that Michael Saylor is quietly making fun of the hyperscalers, going, yeah, Bitcoin has won. Now it must survive the victory. Its gravest threat is not an enemy at the gates, but corruption from within. Factions that invent pretexts, write the rules, and seize economic rights until freedom becomes permission and law becomes loot. In other words, Mike is now playing offense on Bitcoin. So Mike comes out with his whole strategy refit about, strategy's new math, about like digital credit, digital capital, digital intelligence, all their metrics like, Bitcoin per share and all these strategy related finance, innovations, you can make fun of it very easily. So, Mike and his little dinky micro strategy company with his what does he have? Billions in Bitcoin. Does he have $1 trillion in Bitcoin? Does he need to borrow $800 billion? Does he need to borrow $2 trillion like Uncle Sugar? I don't think so. People made this huge hysterical thing about Saylor. Every thumbnail was about Saylor. Everything was about Saylor. Yeah, okay. Well, at least we know where his Bitcoin is. We know how he's financing it. Maybe we don't like it, but at least we know where it is. And think about how hysterical people got over Saylor. Think about it. Now, let's talk about what the hyperscalers are doing. So lizards, what they do is they go out and they create a special purpose vehicle. In other words, a shell company. A company. And what does the company do? Well, the company will own the data center. That's the asset. And the liabilities are the debt incurred to buy the data centers and all the related equipment. So Meta goes out and borrows a whole bunch of money. It doesn't show up on Meta's balance sheet. It doesn't show up in their earnings because it's on the earnings of the shell company. So Meta doesn't own the data center. The shell company does. Meta doesn't have the debt from the data center. The shell company does. Now, yes, I guess at the end of the day, Meta owns the shell company. But what's the shell company marked at in their accounting? Like where is it? Like we know Mike's got STRC. We know Mike is issuing MicroStrategy stock. We know what Mike is doing. So with the lizards, they got two problems. We don't know what their accounting is. Nobody knows what a special purpose vehicle is. I had to look it up and actually study it. Nobody knows what these things are. They call it off-balance sheet financing. Well, what the hell is that? Oh, okay. It's lizard games with all this debt, which they need 4 times as much of. So if the gig is up and their little game is over, how are these guys going to get their financing? This is what everybody said about Michael Saylor. Oh my God. Yeah, I think Mike should increase his reserves. I mean, he's got it to like $4 billion. I think he should bank 2 years of money for sure. And then whatever. But we know what's going on here. Do you know what's going on with lizard accounting? Do you know where all this sludge is? Other than in your 401k? No, you don't. You absolutely don't know where it is. So you're asking yourself, why is Bitcoin holding? That's why Bitcoin is holding. Because Bitcoin benefits from debasement. In other words, how are you at the end of the day? At the end of the day, how are you going to finance all this debt? How are you going to do that? With currency debasement, with printing. There's no way out of that. And if the hyperscalers create a real mess here, the central banks are coming in. Again, why does the Bank of England care about what's going on in Korea? Why do they care? Because if this spreads, they got to get involved. If you look at this, I think people on the stream, even if they're not getting that, there's all this funny business with the debt, like it's being sold to bond funds that you own, whether you want that debt or not, or, there are all these pretend entities that own the debt and the companies don't. Okay. Even if you don't get that, why don't we take a look? Why don't we take a look at some charts of banks? Why don't we look at that? So, KOSPI falls out of bed. And we have a double top in Morgan Stanley, with this being the target all the way down here. Whoops. We got an Alpha Intelligence sell signal at the top. Ooh. Right. We got a Luxalgo getting involved 2 days later. Boom. Luxalgo inserts resistance. Goldman. 3 mountaintop from candlestick theory. A 1, a 2, a 3. A massive breakout out of the range that it was in, and up. Goldman's down 5%. Only 5%. In other words, hey guys, are you working on any of this debt? And what happens if the debt fails? What happens if someone's trying to do a debt deal right now as we speak and it fails, and then Goldman comes down here and takes out the bottom of the 4 wave, which means uptrend over? What happens if some actual issuance that's in process or needs to be in process, what happens if one of these people need money and they can't get it? Like, does that impact the banks? Are they stuck with any of this sludge? Or are the revenue that they get from doing this sludge, is that sugar? Is that over? Are they going from candy to broccoli? In other words, even if they're not, it's not 2008, it probably isn't. The banks are not holding this debt on their balance sheet, I don't think. But what happens if the sugar party is over? No more sugar. JPMorgan gets spanked. Pass the Clarity Act and watch this stock get plowed over. Long Bitcoin, short the banks. Okay, I'm down. I mean, Nasdaq massively up this morning. Okay, great. Is this over in a day? And if they couldn't take Bitcoin down on the KOSPI crash, even if there's another leg of the KOSPI crash, can they take Bitcoin down with it? Yeah, maybe to 62. And crowing about outperformance is usually not a good idea, but let's just take a brief moment to review and take a look at what the weekly chart looks like for SOXX. Let's take a look. Like, in other words, hey, boys, you're having a little bit of problem with your semiconductor charts. Oh, my God. Semiconductors are getting destroyed. They're down massively. Really? Does this look like down massively to you? It doesn't to me. This whole uptrend started in April of 2025. What have they done? Oh, we did a 38% retracement. Okay. So maybe it's a buy. Maybe it's a screaming buy. Okay. That Bitcoin's going up. Bitcoin is bouncing with Nasdaq this morning after not going down yesterday. So great. You guys want to buy this stuff? Is this stuff going to bounce? Okay, cool. Felix says, man, you guys remember 2020 when we didn't care about TradFi or whatever the Fed was doing, even though they were printing heavy. And now it's 2026 and everybody can't stop talking about it. It's hysterical. Everybody's like, oh my God, the Fed and inflation. Completely incorrect narrative. Completely incorrect. They're all talking about the same thing and they're all wrong. Now, the full list, okay, of these 10 names that are going to that are impacted by this will be in Patreon Platinum, but I do want to go through some of them. Okay, the key concept is the whole sector's debt, all of this debt that these hyperscalers have issued matures in the 2026-2028 window. The refinancing wall is the cleanest catalyst in the cycle. In other words, are these guys going to get the money that they want in an environment where long-term interest rates are rising? Because the bond market is like, yeah, guys, we're not taking any of this. Uncle Sugar, lizards, blank you. We're not taking it. You could have the long bond at 6%. Now, that would be bad for crypto. That'd be bad for everything. But I don't think I'd blame the bond market. The bond market's like, yeah, okay, bro. $90 oil, war's not authorized by Congress. Peace out. Related inflation, peace out. Not taking your debt. Now, again, this is what Bitcoin was built for, right? And just to remind you, for all you guys in the YouTube member area who already know this, you already know. I saw Raoul Paul talking about the rails of the new economy. Does anybody in the YouTube member area put a 1 in the chat if you've heard Toby talk about the rails of the new economy, which is machine-based, which, of course, no one is talking about because we're too busy with, Fed corn, KOSPI corn, or whatever it is that Twitter is the new expert on. Twitter was an expert on tariffs. geopolitics. Now they're experts on the Fed, Korean equities, hyperscalers, Meta, Microsoft. I mean, just the experts on Twitter, it's like mushrooms. Some topic comes up and all the experts pop out of the ground like dandelions or mushrooms. It's ridiculous. The real story, if AI becomes an economy, each layer follows. Autonomous AI agents, machine purchases, machines with commerce, wallets and permissions for the machines, machine accounting, right? In other words, there are metrics to identify machines. There are metrics to track what they do through crypto projects. Do you know what any of those crypto projects might be? We do, and it's in the YouTube member area. There's a $sign at the bottom of the chat. Identity and reputation. In other words, will machines have credit ratings? And how is that going to work in a decentralized world? Machine credit, and then you have all of a sudden, you have autonomous markets at scale. In other words, right? You have hyperscalers assumed to grow forever, and of course, they're going to. So don't worry about that. It's not that that's not going to happen, but what might actually happen is that the machine economy is the thing that has the infinite growth capacity. In other words, the entire planet is doing the wrong trade. I'm not even going to ask you to put a 1 in the chat if you've heard me say the entire planet is doing the wrong trade. Raoul Paul's on it. I'm waiting for some big hedge fund to be on it. I think that's the #1 headline after the Clarity Act. So they passed the Clarity Act. They might sell the fact on the Clarity Act. And then everybody's going to start talking about machines, the rails, layer ones. ETH is already bid. Okay. Again, is the wrong trade being done everywhere? The answer is yes. The answer is yes. And I really wish somebody would come back. Not somebody. Everybody would come back into our Patreon and the YouTube member area so that when this hyperscaler thing actually becomes gets real for everybody. Right now, I don't think it's real for everybody. It's real for Korean leverage margin babies and central banks who are watching it. But is it real for you because you own the hyperscaler debt? Or is it real because as soon as they pass the Clarity Act, while Legacy is, in process of having a classic, historical, cyclical Wall Street men behaving badly incident. Wall Street knew about the special purpose vehicles, the off-balance sheet financing. We're gambling, but we're actually not gambling because our gambling is being done by one of our shell companies. Okay. Yeah. Whatever. The problem, and I put it's on the site, right? The #1 rated short video from a free live stream or a free video that we did for Patreon, the bottom line, or at least part of the bottom line of what the problem is Toby going, it's probably not the chip companies and it's probably not the tech companies. It's in the financing. Whoever holds the debt, the banks, whatever. That whole mechanism is FUBAR. It's right. It's on the site. It's on the YouTube homepage for Crypto Noble. Subscribe to the channel. Hit the like button. Check out the video. The video did okay, and then it just sort of slowed down. It's the financing part of this that's the issue, not KOSPI necessarily. KOSPI has the headline because you have margin babies and you have like a countrywide sort of nuke on everyone's brokerage accounts. You had a countrywide nuke in 87 and we lived. The problem is, how does it ripple through? And what can central banks do if it gets out of hand? And there's only one answer, and that's print. That's print. So you pass the Clarity Act. You have men behaving badly at Wall Street. And I will just tell you right now, Bitcoin may go down, but if it doesn't, when the liquidity to stop this mess comes in, because we got two messes. We got Uncle Sugar's mess and we got the hyperscaler mess. That's a double shot. We got two scoops of stinky ice cream out there. Why do you think Warsh isn't saying anything? Warsh isn't saying anything because he knows that this problem is out there, and whatever the pinheads on Twitter or the fixed income pundits that don't understand how the world has changed, and we're like, oh, the forward guidance is how many people vote to hike rates. Yeah, that's the real indicator of what the Fed's going to do. No, absolutely not. The indicator of what the Fed's going to do is what happens with this thorny, hairy problem. Meanwhile, back at the crypto ranch, everything seems to be relatively okay. I mean, it's not like, like ETH is already down. This is the weekly chart of ETH. It's already down. And it is kind of funny that, this could be a head and shoulders bottom with an upward sloping neckline going all the way back to 2023. If you want to get crazy, probably not a good idea, but what happens if this Clarity Act passes and it's actually a legit rally in crypto? Or what happens if crypto gets smashed and then comes right back again? Oh, can you tell that there's a problem going on here? It's like, let's do this. Yeah, let's have let's have ETH versus Oracle. Okay, so everybody, ETH goes down, problem on October 10th. Oracle crashes and keeps crashing. This is like margin hyperscaler poster boy. It's Oracle right here. Yeah. Now, ETH, which is basically the most made fun of cryptocurrency out there, is actually doing better as Oracle is falling out of bed. And even if Oracle bounces today, whatever. Is this stuff over in a day? I don't think so. Even if it is, well, great. It's just going to keep going up. It's going to keep going up. Okay, Bitcoin got smashed. Whatever, I still don't know. Conflict in the Middle East. Raul Paul tells there's nothing wrong with crypto. It's just the payoff was delayed by Fed rate hikes, inflation, whatever. Okay. I don't even know anymore. Whatever Bitcoin's problem is it bigger than special purpose vehicle, phony baloney, massive debt? We have 200 billion in phony baloney debt, and we need another 800 billion. Okay. Is that a bigger problem? Bitcoin's actually going up. Oracle's going down. We know where Nasdaq is relative to Bitcoin. I'm not even going to go into it. Bitcoin down, Nasdaq up forever, right? Wrong. Okay. I mean, Bitcoin's actually got a good Lux algo buy signal, and all of the alpha intelligence buy signals at 58 are still obviously intact. And frankly, I'm sort of wondering how long it's going to take. How long is it going to take before someone realizes that this is happening? That the last attempt to take Bitcoin down with the hyperscalers failed, and is almost, even though it's like you can't really see it, is kind of classic right shoulder behavior. In other words, what is a head and shoulders? Let me just label this Bitcoin. Let me just get that. Okay, so TikTok's got that. TikTok, don't forget to hit the like button. That goes for YouTube as well. So what happens on the right shoulder? Well, the right shoulder is the third attempt to take the market down, right? Oh, you push it down, and the bulls come back. And now you're really going to push it down. That's down here, 58K. Okay. And then it comes back up, and now it's like, I really mean business. And Benjamin Cohen's like, look, the bond market's freaking out. Look, I'm looking for 40K. Okay. Well, while everyone was looking for 40K and everyone was trying to tell me that, oh my God, Bitcoin's the problem. Oh my God. Like, see this? This is the 1 hour chart. Here's the big bear attack right here. It's like, you know what? F you. I'm sick of you guys. This is going down. Boom. And who was down there? Everybody, apparently. Everybody. Novogratz, Clarity Act, everybody. So, you know, when it comes to Bitcoin, yeah, I mean, it's a bear market. Yeah, it stinks. Yeah, you know, if there's a nuke in the system, yeah, they'll sell everything. Okay, but do we not know this? We know this, right? The range is what, 60 to 64, 58 to 64. Can crypto go lower if there's a massive ongoing problem in Nasdaq? Blah 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 blah. We're coming up on Rectember and Rocktober, which, you know, are reasons to be concerned because those are horrible months for equities. And that's when everything kind of blows up in Rectember. However, one thing to consider in equities and crypto is that no one works in August. Like Wall Street's trying to get to the beach. Good luck with that. Europe is not working regardless. Europe is done. They don't work at all in August. Wall Street wants to go to the beach. And if this reminds me of anything about 08, is that these guys are going to be trading from their phone at the beach if this thing has another leg. And, you know, wouldn't it be a great PR event for Bitcoin if Bitcoin held up on a relative basis and maybe didn't fall until this was later stage or doesn't fall at all? Because I don't know. I mean, if this isn't long Bitcoin, short the banks, short private credit, short the hyperscaler sludge. I mean, you know, we discussed 10 names. Okay. Let's go through some of the 10 names just to see what they look like. Okay. So these are the you know, the US KOSPIs, CoreWeave out, you know, pivot, blow it out. Doesn't hold. You know, it's down at its daily discount zone. I don't know. I mean, do you want to get all negative on this right now? No, but like, look at what's happening to this. Like, look at the size of these uptrends, right? Like this is approaching this has already taken out some of its 4 waves. There's another 4 wave down here. This is Nebius Group, NBIS. APLD, Applied Digital. Think we got any margin babies getting blown out of these stocks? You think? This is something from the crypto universe. Like, isn't it great that all the Bitcoin miners decided to become AI hyperscaler companies? Isn't that great? It was great for their stocks. You know, HUD 8 was something that we recommended for years and it exploded. I'll take it. You know, you got a lot of Lux Algo buy signals. You got a lot of puking. You know, you got a lot of support down here. It's not the end of the world, some of these stocks, but it's the banks that bother me, right? These are some of maybe the private credit related companies. Like, there's no bid here at all. None. This looks like a dead altcoin. So does SharpLink. Right. These are all the private credit. Is there any bid here? No. None. None. DeFi development. No bid. UPXI. No bid. No bid. This is like your private credit stuff. I'm sorry. This Ares Management. No bid. Blackstone, breaking out of a triangle, looks okay. Alpha Intelligence sell signal. We'll see. Right. We already went through the banks, right? This is APO, Apollo, where you can have some of this private credit stuff. And don't forget, there's this whole diamond thing going on in Nasdaq. Could it be a bottom? You know, could it be over? Yeah, maybe it's over in the big tech stocks. Maybe. Or is this thing going to rally to resistance? And is this a bear market rally? This is the final word. So what do you got today? Well, you got Nasdaq up on Microsoft earnings. So everyone gets liquidated. Earnings come out and Nasdaq levitates because forced selling ends. Okay, cool. Now, what happens is if Nasdaq rallies back to Lux Algo resistance or back to the Alpha Intelligence pivot, okay. Now, if it blows through there, well, awesome. It's over. They passed the Clarity Act. Bitcoin and Nasdaq go up together. Cool. If Nasdaq fails here, okay, there'll be more consternation, keeping in mind there's no support until 2,500. 27 till 25,000. 27,000 is support, okay? But, you know, these rallies are nice, but will they get through resistance? And that's what you're looking for. Like, that's the day trading mechanism. So, you know, we went through some of these companies, and what these companies do will be in Patreon Platinum. So you might want to go check out Patreon, because we've got not only what the problem is, like this stream was about the problem. In the YouTube member area and in Patreon, we have the solution. What is the actual trade you should be doing? Raoul Paul's saying it. People might listen then. We've been saying it for a year. We opted to talk about that and not the 4-year cycle. The 4-year cycle guys are looking for how this ends in September on October, so they can be 100% right instead of being 90% right. And they're talking about the bond market being the problem, and they don't know about these special purpose vehicles. And I guarantee you, by the time is over with, everybody at the diner and the barbershop will know what an SPV is. They will. Because, you know, like I said, these characters are going to get another $800 billion with this funny money? I don't think so. And the question you have to ask yourself is, okay, is this $200 billion worth of debt any good? Probably not. But how are they going to get another $800 billion? When the head lizard just came out and said, yeah, we don't really know what we're doing. You don't know what you're doing. This is the savage that's paying 20-year-olds $65 million, and you don't know what you're doing with your cloud capacity compute thing. You're saying that on an earnings call. Okay. $65 million salaries for 20-year-olds. And Dana White is on, oh my God, what a savage. What a savage. I love this guy. We don't know what we're doing. We don't know what compute we should keep or not compute, but buy our stock anyway. Are you kidding me? And this is nowhere on Twitter. Nowhere. It's like, oh, the bond market. Warsh is hawkish. Wrong. I don't know about you. I'll take my chances with Bitcoin. I'll take my chances with the Clarity Act. Let them sell the Clarity Act passage, and we'll see what happens. Because you're not really going to know. You'll know in crypto when they either try to sell the fact or this gets dragged down on whatever to see if it holds or comes back. Because undoubtedly, if Raoul Paul is saying it, Raoul Paul may be on the phone with hedge funds saying, hey, Raoul, we're going to buy some of this stuff. Want to get out there and pump some of it? I mean, Sui is paying him. I'm not saying there's anything wrong with that. I wish Sui was paying me. But, you know, this thought leadership stuff is going to get out there. It's not going to be just Toby. The big guys are going to pick up on it. And how long do you think it's going to be before other guys start copying Raoul Paul, specifically YouTube? Like, how long do you think it's going to take before YouTube picks up guys like Jordy Visser, guys like Raoul Paul, who are talking about what's next as it relates to crypto? Who's thinking about this? We are. And our customers. So become one of them. You know, don't jump into this disaster corn pool and get caught in this and miss the real trade. Because the decentralized machine economy, that is the real trade. You're like, what's the decentralized machine economy? Well, I don't know, man. Join us and find out. Okay, we have Zepetis, Yav, a Spartan Colonel, Daniel, Fuzz Crypto. What's up? Oh, can we check hype for Zepetis? Yeah, of course we can. So let's see what's going on in Hyperliquid. Now, why is Hyperliquid worth checking? Well, because Hyperliquid is what people own. Like in crypto, it's been assumed that there's really only one or two plays. That's Hyperliquid and Canton, the tokenization platform. Okay, so Hyperliquid is headed for a trend line on the daily chart. It's not a disaster. You know, it is probably a head and shoulders top, right? I mean, I'm just saying it's just what it looks like. Like all these things that outperform don't outperform forever. People have to sell the winners to finance the losers. Again, does not look like the end of the world. Most likely what you're looking for in Hyperliquid is some sort of confluence between Lux Algo buy signals and Alpha Intelligence buy signals, which are already showing up. So this is the 1 hour chart of Hyperliquid. Okay. You know, people are buying the dip. You can see people buying the dip here heavily. It's at the discount zone. Tactically, buy signals are coming in. You know, if you've been long Hyperliquid, should you puke? You know, if you wrote it up to 63, should you puke it at 53? I don't think so. I don't think so. I think it's just a case of an outperformer that everyone owns getting washed out, which is what's going on. You know, they all own the same stocks. They all own the same debt. So whatever it is they own is getting flushed out. There's nothing wrong with any of this stuff. Like, do you know how hard Hyperliquid is going to go up when the Clarity Act gets passed and they tokenize everything? In fact, now that I'm saying it, the Clarity Act sell the fact is already being done in Hyperliquid. And Hyperliquid may have competition from investment banks if Clarity's passed. That's also possible. But I don't know why you would give up on it when it corrects. You're supposed to beat TFD in crypto. Now, I mean, if you've got your house mortgaged on this thing, you might want to rethink that. But it's okay. I mean, you can't get negative on this. If it's at its tactical discount zone and it's headed for an uptrend line, you know the uptrend line is going to get tested. You know that, right? You know what they're going to do. They do it all the time. I mean, everybody wants it to be tidy and everybody wants it to go down and hit the trend line and bounce back up. And the reality is what they're probably going to do is they're probably going to take it down here to the trend line, scare everybody, run the stops, hoover it up, and take it all back. So I don't know. You know, 50 comes to mind in Hyperliquid. Because again, you know what they're going to do. They did it in Bitcoin. They did it in ETH. They're doing it in Hyperliquid. Same, you know what, different day. Same thing. Same thing. Get everybody out, hoover it all up. Like Charles Schwab, Franklin Templeton, you know, Galaxy Digital. I mean, yeah, you name it. Like who's calling for the Jack Dorsey, BlackRock. You know what these guys all have in common? They have all your crypto. They have everybody's crypto. All these whales, all these characters who liquidated, all these characters who are short or whatever. Yeah. Okay, good luck when the Clarity Act passes and all these big institutions start pushing and pumping their position. If you own, I don't know, untold billions in Bitcoin, why would you not come into the perp market after the Clarity Act passes, after the Twitter ninnies do sell the fact, and just take it up? Wait for this hyperscaler thing to run its course in September and just ram it to the upside. Has that occurred to anybody? Nobody. They're calling for the Clarity Act. Why? Because they don't own it, or they don't want to own it, or they're not going to come in and buy it at the market. This is how you know there's a problem. Just as a side note, before I welcome everybody else, like one of the hallmarks of a major problem, this happened in 2008, and this happened with Celsius and FTX. Steady, boys. White House economic advisor says market's not in an AI bubble. It's not an AI bubble. It's a problem with AI financing. But when they come out and they say it's not a problem, then you know it's a problem. And who exactly is a White House economic advisor? You know, notice it's not Warsh, it's not Fed, it's not everybody like going, yeah, we have this totally under control. Yeah, actually, they don't. So they put somebody on the tape to get on Watcher Guru that CNBC will pick up, then everybody will calm down on CNBC. Yeah, okay. Okay, boys, long Bitcoin, short the banks. That's my attitude. Tom 1. Following culture, the news or politics is neurotic. I love this. I gotta read this. Man, I wish I voted for Harris. None of this would be happening and rates would be down and Bitcoin would be over 200K. Okay. The current administration ruined everything. We got to wait for 2028. So somebody can come in and fix this so my bag can go up. You know what? What happens if everybody goes to the polls and actually expresses that view? Like, what happens if somehow they screw this up to where they actually pass the Clarity Act and crypto becomes legal? Then the United States shifts massively to the left. Privacy, the future of money, integrity of money, proof of human, proof of machine. I don't know if that's what we should be talking about, like the midterms. I don't know if that's a disaster or not a disaster, but the longer they push this and the worse it looks, TikTok is in November. Richard Barry in the house, welcome. Warpaint is here. Odd Dark, a Spartan Colonel, welcome. W. Wallace from Hoboken, New Jersey, where I used to take the PATH train into work every day. Continuing with the railroad analogy, which we've been pounding the table on, that the railroad didn't blow up the railroad. The railroad blew up the Goldman Sachs of the day, who financed the railroad, which, by the way, is this is the smartest thing that the legacy bond market press has actually picked up on before we went on this Twitter wash off the deep end thing. That's what people should be focusing on, which is what Toby's focusing on in the YouTube member area, which is why you should be there. A1 Rising said this has nothing to do with who's in power or not in power. Okay. And one final note. Two final notes. Long Bitcoin. Uncle Sugar's borrowing costs rise to the highest level since 2007. A great way to talk about the bond market. That's exactly how they should be talking about it. Administration loses temper during a security meeting, shouting and cursing out of the current military options presented to him and lack of progress. Okay. So sovereigns, how are they doing? Do they have your interest at heart? Just how are they doing? People want to know why Bitcoin isn't down. I just told you why Bitcoin is not down. The masters of the universe, I don't think they have their act together, right? Administration, what are you doing? Lizards, told you they don't know what they're doing. Sovereigns are showing you they don't know what they're doing. And we are all bearish crypto. We're looking for the next puke. Oh, yeah, I'll buy it when it makes the bottom. Okay. Me too. Me too. But nobody is seeing this the right way. Even if crypto goes down, I'm telling you, Warsh, hyperscalers, special purpose vehicles, sovereigns have this all wrong. Wrong, wrong, wrong. Do you like the Ironworch patch on Zcash? My attitude on Zcash is have a little faith. Right? Instead of going, well, you know, is this patch going to work? Is that patch going to work? Which I get it. These are legitimate fundamental developments. The development in Zcash is it has the opposite formation of all the hyperscalers. in that it has a head and shoulders top, a head and shoulders bottom at the top end of a range, which was a hallmark of equities during the QE era, which I was there for. So are they going to sell it? Is it going to go to 400? Are you going to have more constants? I don't know. But I do know that if this is what it is and Zcash ever broke out, it's 1200 or it's 1200. So, I understand that there are fundamental developments and they matter. I'm not minimizing that, but Zcash is encrypted Bitcoin. That's it. Sometimes if it's going up, it's simple. Whether it's going up now or it's going up later, it's simple. Like the bear trades are complicated. That's why they become bear trades, because they scare everybody and no one understands what's going on. The bull trades, well, I don't know. In 2021, it was the Fed printed $14 trillion and they came out with all this new exciting DeFi and layer ones, and boom, that was it. Liquidity and innovation, and then FOMO. Boom. With this, it's going to be privacy, Bitcoin, sound money, Rails, Raoul Pal, Toby Ward, the machine economy. Is it going to be complicated when an AI agent actually makes a meme coin on its own? Somebody programs an agent and the human just lets it go. The machine creates a DAO and the DAO releases a meme coin. Is that so ridiculous? No. You need one meme coin to wake up the market. Fart coin woke up the market. Actually, it was GOAT and then Fart. Woke up that whole sector. What's going to happen when GOAT and Fart are actually created by machines? You don't think that's going to happen? That's the real AI trade, which, of course, we're talking about it. Toby hates meme coins. I get it. Lizard emoji coming soon. Actually, we have, you ready for this? The Eagle King has invented Lego Bill Lizard for the $4.95 emoji program, which, by the way, you can get in the YouTube member area by hitting the $ button. You can get a emoji next to your name, so I can give you special shout outs, and you get access to all the cool emojis we're developing, like Lizard Lego Bill. Union Crypto is here, born at St. Mary's Hospital. Welcome. Please become a Shelly Farmer Allen, the one-woman hedge fund, is here. Live it. Buy high, sell low on your behalf. Listen, I am not going to get negative crypto 2 months before the end of the 4-year cycle trade. I'm not. If they can wreck Nasdaq, they can take it wherever they're going to take it. Just let them. And if this is a repeat of FTX, where everybody thinks they're going to buy it lower and they don't get that chance, I'm looking forward to see what happens. That's all. I mean, I've been wrong since this started. I don't care, because 2, 3, 4, 5 years from now, nobody's going to remember if they bought Bitcoin at 70, 60, 50, or 40. No one's going to care. Just like in 2021, you didn't care if you bought it at 3,000, 7,000, 10,000, 15,000. Michael Saylor paid the 2020. He paid the 2017 high at 20K. Nobody ever thought Bitcoin was going to go above 20K ever. And Michael Saylor was like, you know what? I'm buying it at 20K. I'm buying it at the high. And I remember my hedge fund buddies going, what a savage. What a savage. Now he's an idiot. Whatever. These things, they ebb, they flow, but longer term basis, no one is going to care about the minutia of the range we're currently in, even if they have to blow it out. You know what'll happen if they have to blow Bitcoin out. It'll be because of Nasdaq or some kind of systemic problem that shows up during Rectember. We already know what the problem is. We know what the problem is. The margin babies in Korea didn't know, and I don't think the margin babies in the United States know. You know, we got $1 trillion borrowed in the United States. We have $1 trillion borrowed against stocks. Okay. Long Bitcoin, short the banks. Good luck with all that. Good luck. Richard Barry, appreciate the love, brother. Yav, for sovereigns, men who crave power look back over the mistakes of their lives, pile them all together, and call it destiny. A quote from 1987, Masters of the Universe. Okay, that has been enough bloviating for today. That is the market update. I will see you tomorrow.